All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for another market price update report for Sunday, May 25th. Diving right in, first off, looking at last week's trading, ended up having 12 different trades, 7 wins, 5 losses, and a total gain of $11,637.50. So, looking at the charts going into this coming week, starting off on the SPY for the S&P 500, you can see that we have pulled back a little bit over the last few days. This was basically on news that the European Union and Trump administration were going to bat against each other once again for tariffs, and they ended up basically saying that Trump was going to enact a 50% tariff across the board on the European Union if they did not come to a trade deal, and had a little bit of escalation on trade deal rhetoric. Since then, over the weekend, that has softened a little bit. The Trump administration has actually pushed the deadline back in time from June 1st out until July 9th. So we have a little bit of time for that to continue to develop. So I am expecting a little bit of stability coming into this week, especially since we are sitting right on top of the 20 period SMA and the gray 200 period SMA here. We do have a decreasing RSI that has crossed back from being overbought. So that is a technically bearish signal, signaling not necessarily it's time to sell, but it's time to be a little bit more cautious. We also have our MACD rolling over here. As you can see, the blue line crossing below the signal line here. That is signaling maybe some caution is warranted as well. So I'm not expecting a big rip your face off rally this week, and I'm not actually really anticipating a huge drop either, as long as news stays in its current state. If we do get new news coming out on tariffs or talks fall through or things like that, obviously that is going to impact this. But from everything we can see right now, I am expecting more stability this week than anything else, and I'm assuming that we are probably going to stay within that probably 568 range up to about 600 or 598 on the top side, probably just chopping back and forth a little bit within this range this week. And to me, that would actually be really, really healthy for the market. It would give us a chance to have the RSI continue down a little bit and reset. It would give the MACD a chance to reset a little bit, and it would give these moving averages underneath us a chance to come back up and the 9 EMA to come back down, and all kind of converge on the current price zone, and then for price to use that as stability to move higher if talks do end up going well. So going out to the triple Q, this is the Nasdaq, basically the exact same thing. We do have a little bit more room to give up here, and the Nasdaq stocks are the front runners typically in the market, so it does make sense that they may have a little bit more room to pull back here if anything does go sour in terms of trade talks. But again, I am kind of assuming that we are going to stay on top of the support zone here, going down to around 493 on the lower end, and then probably upwards to around 525, basically up to the highs from this previous week, or maybe just slightly higher, but I'm kind of targeting that 525 area on the NASDAQ. Now going out to the Russell 2000, Russell 2000, we are below a couple more moving averages on the Russell than the other two indexes we just looked at. We're below the 200 period moving average instead of above it, which isn't a great look. We are above the 50 period moving average, which hopefully will act as support, and that kind of coincides with the pivots and support back here from the left of the chart. So I'm hoping and expecting that we are going to find some stability in here in the like 195, 196 zone on the lower end, and then coming up into the 200 to 210 range on the top side. More than likely going to stay within that range this week as we let the indicators that we track here for escape velocity trading kind of chill out and reset themselves as well. Going out to the Dow Jones, actually more similar to the Russell than the other two indexes, the Nasdaq or the S&P. Again, below the 200, but above the 50, and the 9 and 20 are just kind of chopping in between. If we do get a breakout above 425 to the top side, I would be potentially interested in playing that, but I would probably actually wait to break above 430 instead, just to get above these two pivots here, because those are kind of the last lines in the sand that the bears have to deal with, the bulls have to deal with before we get a push back up towards all-time highs. So if we break above 430, I will turn bullish on this. Right now, I'm just reading this as neutral. I'm not expecting a huge drop. I think we will, even if we break the 50 period SMA in the short term, I do think the pivot lows here around 406, 405 Also checked that back here on the left of the chart and had a gap below it right here. So that zone, the 405 zone, has been tested multiple times. So I'm assuming that if we do break that 50, we will come down, touch that 405 level, and then bounce back and probably stay between that and 430. Going out to IBIT, tracking Bitcoin, you can see here we actually put in a new all-time high. This is a 6-month chart, but this had prior, this point here had been the previous all-time high, and we did break above that. We are now sitting basically right at that price zone. So I'm not anticipating us to have too much downside. I am assuming any dips here are going to get bought pretty aggressively as we move higher. If we go out to Ethereum, we have nice high base over the last several days after a really nice gain. If we get back above this 200 period moving average around $20, I am expecting more increases to come. And I think the downside risk here is fairly limited. If we go out to XLB, this one I'm not super interested in one way or the other, honestly. We are kind of flirting with this diagonal zone, but we have the 200 right above us, and I just don't see strength here right now. So I'm going to stay away from XLB. If we go out to XLY, consumer discretionary, kind of the same thing. We do have a little bit more support under us here, and technically a confirmation back up around 215 would be signal for the bulls. I might get talked into playing that, but I think there are other areas of the market that I would rather play. Going out to XLK, this looks very similar to consumer discretionary to me. We are sitting right on top of the 200 and the 20. We are in that price zone from back here, so that should play a role for support. Honestly, I'm seeing more neutral consolidation here at the upper end of the range than anything else on XLK this week until we figure out the trade deal news. Going out to XLE, this looks like garbage to me. No read whatsoever. This is just plain neutral. I could see a case for it coming back down to the lows. I could see a case for it coming back up, breaking above the 50 and trying to test up into this 200. So I'm staying away from energy this week. Going out to XLU. XLU has held its support several times here recently. We did break above our longer term diagonal, so I do think the nod is to the bulls to the upside, but I'm probably not going to be playing this area of the market just again because I think there are other areas to play. Going out to consumer staples. Consumer staples, super neutral, have quite a wide range here. Basically between 78 on the lower side and up to about 83 on the top side. I'm not going to be surprised by any price movement in between those two levels, so I'm not interested in that this week. Going out to XLC. XLC, I would not be surprised to see if we hold support on the 20 SMA here and eventually reclaim the 9 and break above $101. If we do, I think the nod is to the top side and could see a move back up to around 105. Going out to industrials. Industrials look very similar actually to communications. We did just touch up right up to the previous all-time high up here. Pulling back, I think the 20 period moving average is going to act as support. We'll see a little bit of consolidation and then likely a leg higher if the EU news and tariff news comes in favorably and probably break that line and move down to the 200 down here around 134 if that EU news doesn't go favorably. Going out to XLF, basically the exact same thing, rinse and repeat from the last two charts we looked at. If news on tariffs doesn't come out very favorably, coming back down into support. If it does, probably reclaiming this 9 EMA and coming back up to around 52.5. Going out to XLV. XLV looks like garbage. I have no interest in this whatsoever. On the low end of the chart here, we did have a wick down below previous support before, and it did buy back up, but that buyback ended up getting snuffed out pretty quickly on that 20 SMA and just went right back down last week. So if anything, I see neutral to maybe bearish on this one, but I am not interested in playing the downside on XLV right now. Going out to gold. Gold is in basically just a little descending channel. You can see here the lower end and the top end. Don't have a strong read one way or the other between these two. I do think eventually we're going to break out of this to the top side. Whether that is this week or the following week is unclear, but I do think that we are going to break out to the top side before we end up having any significant sell-off in gold because gold is all the rage right now. Going out to silver. Silver, I would actually be quite interested in playing here a break above $30.50, probably going back up to target one around 31.40. And then if we back this out to a weekly chart, I do think that we have potential to break above that 31.8 level and actually see a significant run in silver. So silver, I am actually quite interested in this week. I'm going to be marking that in my trading for this week to keep an eye on silver. And then finally, last but not least, going out to the dollar. Dollar showing weakness and actually breaking down on Friday. And I do think there's probably room for this to continue to drop. Last but not least, let's go out and look at our S&P 500 heat map. This is a 1 week performance showing all of the areas of the S&P 500 and where money is moving in and out. And you can see a fairly shitty week last week. Bears were fully in control. So most people's portfolios probably took a hit last week if they didn't know how to protect themselves in the markets with the risks they are taking. Going out to Factory Forex, looking at the market economic data week ahead, we have nothing Monday and Tuesday. Wednesday, just FOMC minutes, and then Thursday, GDP, unemployment, and Friday, core PCE. So really the only one of this that I'm going to be paying much attention to is the core PCE. I don't think either of the three of these are going to have much market impact this week. So I am mostly going to be focused on Friday and think we are going to have mostly a news-driven market based on any kind of updates on tariff news. I think that is going to be the main driver this week. So just being nimble and knowing that at any moment some news might come out one way or the other that can bust a trade. So making sure you are trading safe, keeping stops in place and tight, and just making sure that you have good risk reward ratios when you go into trades. So with that, guys, as always, trade safe. Let me know if you have any questions. Hit me up in the comments and give me a like and subscribe if this is helpful to you.